Wendy? Virusha is waving. Shah, how are you? Shah? We are just about to start in 3 minutes. Edna, are you still with us?
Yes, I am.
Okay, you can hear me clearly now?
Yes.
Perfect. Mushay?
Yes, I'm here. Thank you.
Okay. So we are waiting for the other panelists to log in, but immediately at 11, we will begin. And when they join, they'll just catch up so that we are time conscious.
Good morning. This is Rose Mora joining in.
Okay, nice to have you, Rose. Welcome.
Thank you.
Okay. Someone is raising a point saying they cannot hear the panelists, but I can hear you pretty well from my end. Any other person having trouble hearing?
Can hear pretty well.
Okay.
I can hear you.
So it's 10:59. In about a minute, we will be starting. Well, it's exactly 11 a.m. So a very good morning to everyone who has joined in on today's webinar. Thank you very much for making time. My name is Ondiro Ganga, and we gathered here for good cause, actually. We want to discuss the proposed minimum 1% tax that will come into effect on the 1st of January 2021. Now, this is a conversation that we must have bearing in mind that it's something that will come into play. It will have an impact both on the government side in terms of revenue and on your business and on my business, or rather on me indirectly as a consumer. Now, before we get to the nitty-gritties of our conversation today, because this is a webinar, we have to lay some ground rules. If you're not speaking, please try and put your microphone on mute so that there isn't a lot of background noise when the speaker is speaking. Also, use the chat box. If you have any questions, please write them there, any views. We have a management team that will be going through them, and during our Q&A session, they will be discussed by our panelists. Welcome to everybody who's joining in. As I'd mentioned earlier on, my name is Ndero Ganga. Now back to our conversation of the day. Early this year, that is 30th of June 2020, President Uhuru Kenyatta assented to the Finance Bill of 2020. Now, remember, this bill was introduced in Parliament on the 6th of May. Now, it was seeking to amend some of the tax laws in the country to sort of create a buffer for revenue in the country during the COVID-19 pandemic. Now, what does the minimum tax say or stipulate for those who might be joining us but might not be familiar? Now, it says that you will be taxed 1% of your gross turnover every single year. The government will be able to look at how much you've been able to sell or how much you've been able to make, and then that will be taxed. Now, remember, the tax will be payable for the following people. Now, if your income is not specifically exempt under income tax, and also, if your source of income does not include employment, which is taxed, rent from resident property, capital gains, taxpayers in the extractive sectors, or taxpayers whose income is not subject to turnover tax. Now, how does it work? How will you be taxed? It is paid in installments of 4 times a year on the 20th day of the 4th month, rather, the 6th month, the 9th month, and the 12th month. Comes into effect January 2021. However, bearing in mind the current COVID-19 pandemic, it has had ramifications on the economy. Over 2 million Kenyans have lost their jobs. 65% of Kenyans have taken pay cuts. Businesses have shut down, and even government is feeling this. Its revenues has gone down. So what is the way forward come January 2021? Are we for this tax? Are we against it? And what are our reasons? We'll be having an able panel to take us through that very briefly. But now I'd like to invite Ishmael Bet, who is the CEO, Association of Kenya Suppliers, to make his opening and welcoming remarks. Ishmael, take the stage.
Thank you, Okama. My name is Ishmael Bet. I'm the CEO, Association of Kenya Suppliers, representing the interest of the suppliers of Kenya. They are taxpayers, they are Kenyans. At the same time, they are actually included in the economies of the country. So, as a CEO of the Association of Kenya Suppliers, we represent importers, distributors, growers, manufacturers. All they are doing, or they are actually suppliers in this country. And I will exactly stick to my call, that is welcome remarks. And one, first, I'm here as a taxpayer. 2, representing taxpayers. And 3, as a concerned Kenyan, who is concerned about the Kenyan economy. And as part of my talks, actually, I want to zero into opening this as a national conversation in a national platform to bring together other stakeholders. We've been conversing the same other BMOs, close to 10 BMOs here represented, and we want to thank KM taking the lead. We have Institute of Certified Public Accounts, Law Society, the Kenya Association of Operators, Kenya Association of Hotel Keepers, Retail Trade Association, Association of Kenya Insurance, Association of Kenya Bankers, and Association of Kenya Suppliers. We are represented. We've been having this conversation. We want to have a national conversation, both with the public and the national government, and look on ways and means on how this can be handled. Because if you see all these members coming in, These are representative of about 20,000 members. So here today, we are bringing the minds of about 20,000 members who are concerned about the minimum tax, how it will impact on the Kenyan economy, how it will impact on their own operations, given the fact that we are aware even today, if you read today's news, that the CS mentioned coming January, brace yourself for the hard times. Actually, that it's not going to be an easy because they've been hit hard as a shock, not experienced before. We are in the industry also have been hit hard. We are equally. And we want to ask government, if you have been hit hard that much, we have also been hit hard. Can we converse? Because the same experience you're going through, in the same experience, a private sector, a manufacturer, an importer, a supplier is going through. And as a matter of fact, we've had conversation with government earlier on. We've had conversation with other stakeholders earlier on. In the industry, currently with the coffee thing, some of them are operating below 75%. And that means they are actually working on, they're working on up to 25% of the normal, of the optimal operations. If you couple this one together with poor payment culture in the country, the government is not paying good time, sometimes it might not pay at all. Some of the private sector might not pay at all. We've had bad debts, asking government, can you come through to KRA? We also have high cost of production, duplicate taxation, high cost of borrowing, huge permit requirements, up to 25 permits before you operate, statutory requirements. Now the new 1%, how will it impact on the economy? How will it impact on the national economy? How will it impact on individuals and the individual companies? So I would want to actually welcome each and every one of us who are in this forum today to feel free and let us know. We've actually, I know, shortly we'll have a presentation from the experts, the tax experts who will give us analysis on how this will impact. But I want to appreciate the fact that we have a good number. I can see from my screen, it's close to 200 participants. We want to have you around and feel free and give us your opinion. From my end, I thank you.
Thank you very much, Ishmael, for those remarks. And you've mentioned something very pertinent. And it's sort of a catch-22 situation. If the government is reeling from the impact of the COVID-19 pandemic, you've just quoted the World Bank economic update that was released yesterday, where they're predicting the GDP has slipped into the negative territory, negative 1.0. If the government is going in that direction, you can imagine what businesses would be going through in this country. But let's welcome somebody who's in business and who understands the plight of manufacturers to give the welcoming remarks. Mushai Kunyiha, who's the chairperson of the Kenya Association of Manufacturers. Welcome.
Thank you very much, Ondiro. And I want to say thank you to all the participants who have joined us on Zoom or online. A special thanks also to the other associations we've been working with. I'm from the Kenya Association of Manufacturers. This has been a joint effort with the Institute of Certified Public Accountants, AKS, as Ishmael has mentioned, the Law Society of Kenya, the hoteliers, and quite a number of other associations who have joined us, including RETRAC, just to discuss this issue and see what are the implications of it. So just a few comments on where we are and what brought us together. I think everybody knows a lot about 2020. 2020 will be written a lot about, has been written a lot now and will be written for quite a while because of the pandemic and the impact that it's caused globally. And when we look globally at what other countries have done and what other nations have done in response to the pandemic, is to understand that one, like you raised and the World Bank has, is confirming in their report, is that we are going to go through hard economic times. We are going to go through some storms now, just because of the impact of what has happened. And it is not It may not be of anybody's individual will, or the choices are few. We are all going to have to sail through these storms. So then it becomes a question of what do we do? How are we going to be able to get through these storms? And we need to get through them together. A lot of countries have been very liberal in what they've been able to give their economies, their businesses, their people, whether it is wage support, whether it is actually direct support in cash, it is moratoriums on payments and that kind of thing. So they have really done a lot to try and support their businesses and their economies, because they understand that what you need to do is support the businesses to go through these storms, because there will be a time after the storms. And it is what we do now that is going to help us get through those storms. And the Kenyan government was no less generous at the beginning. In April, we got some benefits. I think we are constrained because of our, we are a lower middle income economy. We don't have that much to give out, but also the debt that we've accumulated means that we've got less space to be able to move. But all the same, we've got some benefits on pay-as-you-earn, on VAT, and also on income tax for corporations at the beginning of April. And that was to some extent useful, if not very, especially on the PAYE and the VAT, was very useful for people's pockets. But also it just sends the right signal that, the government is going to walk with us through this journey. But then, like Kondiro mentioned, we then got the Finance Act and a couple of surprises. So just to comment generally, I think we're going to hear a little bit more about the details of the tax. I think there are a couple of things that are worrying about that tax. One, we're in the middle of the biggest economic shock for 100 years. One wonders, is this the best time to start thinking up new taxes? Agreed. We will probably have some challenges in raising revenue for the government. And like has been mentioned, just like our businesses have challenges, the government has revenue challenges. But a new tax is not necessarily the only way to raise revenues. They could have used the existing taxes. And we already had, I think Ishmael mentioned, we are probably going to reverse the VAT benefits we got. I don't know if they're going to reverse the PAYE and maybe the corporate tax. And to my mind, it is easier to deal with those kind of reversals than to try and introduce a whole new tax that confuses and conflates everything. One of the key principles of taxation for business everywhere is that you want taxes which are both stable and predictable and easily, we call it practicable as well, so that businesses can easily calculate it. We are going to hear how this tax, as it is new and it's coming in a difficult time, nobody quite knows how to apply it. It's got drafting errors. It's got challenges with wording, where they've added wording like gross revenue, which does not exist in the law, so to speak. So is it necessary really to go into this direction at this time? Because we really have big challenges. Now, obviously, I think for most of us Kenyans, we know we are going to have a harder time in the coming years, just based on the pandemic, like I mentioned earlier. But how can we participate equally? And I think the thing about taxes, and what we hope to be able to do here and get some ideas and conversation here, is that always it's a societal thing. Taxes are negotiated because we agree as a people that we are going to contribute, and we are paying for our services, we are paying for roads. It's easier, rather than me having to build my road wherever I want to go, I put in some money and then we get a road for all of us. But at the end of the day, we need to have a conversation about how much do we need to spend on these things. And that is what part of the conversations we are going to be having with government around. Also, we are having to contract on our expenditure. We've got a lot of people who have had pay cuts. We have had to cut a lot of our capital expenditure. We are not doing many big projects at the moment just because of the challenges of the pandemic. And we are challenging government as well. As you take from us, can you show us where are we going to be making this savings so that we can go together in this journey? And at the end of the day, what we are hoping for is a more prosperous Kenya beyond the pandemic. But if we try and take everything now, if we milk it now, we can cause what they call economic scarring. We can create damage now that is going to make it so much harder to get out of this situation than is necessary. So I want to welcome everybody to the conversation. I think it's going to be an interesting conversation. And we want, basically it was three things we wanted from us. We want to hear people's experiences and views around this. One of the things about this tax, it is a very blunt instrument. Because on the one hand, some of the feedback we've gotten from government is that there are some companies that go on and for many years, they keep making losses and they don't pay any tax. So we had to get them. So we say, yes, okay, there are some of those companies. I don't know how many they are. Maybe we should be told how many they are. But perhaps a more targeted tax would have worked for them. This is a blunt instrument that hits absolutely everybody. Whoever, whether you've been paying taxes or not, it is just a big blunt instrument where we could have gone for something surgical. And because it's a complex world out there, we are hoping that also from the participants and other areas, we'll be hearing from insurance, we'll be hearing from distributors, we'll be hearing from SMEs on how this impacts them. And we need to say that, look, let's hear what the challenges are likely to be. And then secondly, we want to have a discussion around what are the possible solutions? How can we change this tax? What can we suggest to government that is going to make this better? I think at a lot of us are saying, park this tax. We don't need it now. There are other ways of raising revenue, and we can discuss those. Let's not necessarily go on towards this tax. The implications are too serious for this. And then from that, we hope that people who are here and elsewhere can also sambaza this information. Let's get this information out there so that we have time now to change what is necessary. This is going to be the responsibility of Parliament. Parliament actually are the ones who impose these taxes on us. It's not just government because they have to pass the laws. And we are hoping we'll be able to engage with them and also government beyond this with the information that we are collecting here and say, let's do something that works for everyone and something that works for Kenya, because Kenya is what we are trying to get through these difficult times. So thank you very much, Ondiro, and I'm looking forward to the conversation. Ondiro, you are muted, sorry.
Thank you very much, Moshe. Listening to you is always very interesting. You not only point out a problem, but there's always a solution at hand with you. And hopefully during the conversation, we can discuss alternative mechanisms that the government can use to raise revenue, because an unpredictable tax environment where there are different tax brackets introduced every single day is not favorable for investors, is not favorable for business, and in the long run is not favorable for government, because if businesses are not running, they cannot make money. However, let's speak to also people who understand this, and I'd like to invite the CEO of the Institute of Certified Public Accountants, who is Edwin Macquarie, to make his remarks with regards to the minimum tax and the topic of the day. Edwin, please unmute yourself, and the stage is yours.
Thank you, Oganga. I'll request that my chair goes as I settle down
Okay.
in Mombasa. So I'll request my chair, Rose Mora, to give it to me.
Great. The baton has been passed to you. Please take over.
Thank you so much, Ondiro, for that question about the predictability of taxes. So I think, as Moshe has rightly said, or it has rightly been said, we are perhaps in the middle of the greatest public health crisis in a century. And on top of that, of course, which has meant that very low economic activity, of course, very low tax collections. The government has continued to borrow money. I think as of June, we were at probably 6.7 trillion, almost at the ceiling. And of course, this week, we've just had a lot of activity around, the government having to go back, the Treasury having to go back to the IMF and request, for budgetary support. And of course, what the IMF is saying is that if you want budgetary support from us, you actually must think about tightening your belt, making sure that your state-owned enterprises are efficient, and reducing other, pretty much cutting our cloth according to our shirt. So when you think about all these things, what at the Institute has been a number of things we've been talking about for a while. One is around that predictability of taxes. We've talked about, and we've even proposed a national policy on taxation that will actually look at how all the various taxes actually impact the economy, impact the business as a whole. One of the challenges we find that business sometimes, government appears not to recognize that really government does not generate revenue. Revenue actually comes, tax revenue comes from business and from individuals. And therefore, for any economy to grow, government must really facilitate business and must create an atmosphere that is conducive to make sure that businesses are operating optimally. And therefore, we've had, over the years, we've had what you call taxes that, they come in almost from like in a slapdash manner where, taxes are introduced one year, they're pulled back the next year. They then come in the next year, and we've seen a number of organizations, including from KAM, from KEPSA, really protesting at the unpredictability of these taxes. You don't know what's going to come up next year. And so we have actually proposed to the National Treasury, and again, working closely with the Kenya Revenue Authority, for them to have a national discussion around having a national tax policy that will actually look at the economy as a whole. And remember, our economy has changed significantly from maybe 40, 50 years ago. We're really looking at a regime that's also moving a lot towards digital sources of, digital businesses, various different methods of delivery and so forth. And therefore, we think we cannot really continue with our taxes as they are, but we must look at having a national policy framework that addresses the macroeconomic factors, addresses what is critical to the country, and how does the taxation regime actually encourage growth of business, even to allow government to be able to collect more money. Because unless business grows, then the government cannot collect adequate revenue sources.
Okay. Rose, just a minute. I'll come back to you in a few, but if you're joining in the conversation, remember the chat box is open. You can ask your question if you have any remarks you'd like to make or thoughts you have with regards to the minimum tax. Now, I don't know if Edwin has settled. If he has, he can take this. Just walk us through the implementation of the minimum tax. But if he hasn't, Rose, in under like 3 minutes, how will implementation look like? What can businesses and business people expect come January 2021?
So I think one of the things that we have to be clear is that this tax actually was only brought up in June of this year in the Finance Act of 2020. And when ISPAC came across this first, we actually did write back to, during the public participation, actually wrote back to Parliament and to Treasury, and even gave different scenarios, because we're looking especially at a lot of our businesses here in Kenya. Most of them have pretty much thin margins. So if you have running a business that has thin margin and the government wants to come upfront and take 1% of your revenue before you have even taken all overheads, and that's an issue. From an implementation perspective, I think we're still waiting for those guidelines to be released in terms of how the tax will be implemented. And there's a number of entities that will be exempted from this, but I think any entity that's earning perhaps 50 million shillings and above will be subject to this 1% minimum tax. And so in the event that you've already paid the 1% minimum tax, so assuming let's say an organization makes 100 million shillings from a top level revenue basis, you pay 1 million shillings out of that. And that is even before you have deducted all your other expenditures, your overheads, your rent, staff payments, and so forth. In addition to that, you're also paying all your other taxes, pay as you earn, VAT, and so forth. And you then will find organizations are actually paying more in terms of taxes than the profits that they have made. We've done a number of scenario analysis, and I can share those at a later time.
Perfect. Now, Edna, if you're ready with your presentation, please. Time is slightly tight. Edna?
Thank you very much, Ondiro. Hilary, you can just share the screen with the presentation. So what we'll do is that we're going to unpack minimum tax. What exactly does it mean for taxpayers? And just to start us off, as has been said by those who have spoken ahead of me, minimum tax was introduced by the Finance Act 2020, and it is payable at the rate of 1% of gross turnover, effective of 1st of January 2021. So as has been said by CPA Rose Mwaura, what this means is that this is a minimum amount of tax that businesses will be required to pay. So if your current tax obligations are less than 1% of your gross turnover, then you'd be required to make good the difference and pay 1% of gross turnover. So this tax is going to be applicable to taxpayers whose income is more than 50 million Kenya shillings. And this came in the wake of the reduction of tax rates. There was a reduction in the VAT rate, corporate income tax rate, and the pay-as-you-earn rate. And it is seen as a measure to try and expand the tax base so that we have more taxpayers contributing to the tax kitty. What we have seen is that in a bid to introduce new taxes, the Revenue Authority and the policymakers at large are actually favoring turnover-based tax regimes. One is a minimum tax that we shall be discussing today, and we also have other taxes that are based on turnover, such as the digital service tax. Both of them will be effective from 1st of January 2021. So one of the questions that we have put out there, especially to government, is that turnover-based taxes do not necessarily tax the affluence of businesses, and it goes against the canon of equity. But then moving on just to see the kind of businesses that are going to be affected from turnover tax. So the first one will be the low margin businesses. So this will be discussing and unpacking more in detail, but with the current 1% minimum tax rate, it means that for you to be outside the ambit of minimum tax, then you must pay at least, you must have a gross margin of about 4%. We'll see shortly that not so many businesses are able to have a profit margin of 4%. The other category of taxpayers that is likely to be affected would be capital intensive businesses that have tax incentives. An example that comes to mind would be the power sector. It's very expensive to put up a power plant in this country, but once they put up that power plant, sorry, Hilary, yes. Yeah, once they put up that power plant, then the government gives them some corporate tax incentives. So coming back to then ask for this minimum tax at the rate of 1% of their gross turnover is very punitive from a business perspective. And we'll see that this is also going to go into the cost of production in the economy. Another category would be the new businesses. Once you establish your businesses, it is highly unlikely that you're going to be profitable from the first year of operation. It takes about 3 to 5 years for new businesses to break even. But the way the minimum tax legislation is currently worded, it means that as soon as you get into business, one of the costs that you need to factor in would be minimum tax at the rate of 1% of gross turnover. So we'll see that this is going to be very punitive when it comes to attracting foreign direct investment into the country and also establishment of new businesses. Generally, we know that turnover minimum tax is actually targeting loss-making companies. And we'll see that companies make losses for different reasons. This calendar year, we have seen a number of businesses issue profit warnings, especially those that are listed at the Nairobi Securities Exchange. So it is a tough year, and quite a number of businesses are going to be in the red from a profit perspective. So if this trend continues into next year, then it will be expected that all these businesses will then be taxed at 1% of their gross turnover, which is going to be very punitive. So moving on to the next slide, where we'll just be talking about the concerns of the BMOs. And one of the concerns, the first concern is the timing of the introduction of minimum tax right? We do not think so. And why don't we think so? One of the speakers says that both the government and taxpayers have been affected by the negative impact of COVID-19. So in as much as we understand that the government needs to continue in operations, needs to raise revenue, the government should equally also understand that taxpayers have also been impacted negatively, and we may not be able as taxpayers to be able to realize the kind of revenue that the government is looking at. And just to give an example, following through from what CPA Rose talked about. So already we have quite a number of businesses that have sent their employees home. We've also had a number of businesses whose employees are on salary cuts. And why are businesses doing this? It is because the top line has been adversely affected. And with this, businesses still have fixed cost of operations and they need to remain afloat. So they are doing whatever it takes to ensure that they are able to meet their fixed costs. So introducing 1% of their gross revenue as part of their fixed cost is very, very punitive. It's going to lead to a lot of cash flow issues and cash flow constraints. And ultimately, we are likely to see quite a number of businesses closing because it will not make sense to be in business just to raise that 1% minimum tax for government. So this is going to affect the economy negatively and is also going to make the country very non-competitive. On the next slide, we then ask ourselves, will this tax make Kenya an attractive economic hub? As a country, we are trying to take the position of being the most attractive country within the sub-Saharan Africa from an economic perspective. And it is highly unlikely that this is going to yield the results that we are looking at as a country. So the first thing that we ask ourselves in terms of attracting foreign direct investment into the country, if you're a new business, you're newly registered, it's going to take you, as I said earlier on, more than between 3 and 5 years for you to be able to break even. So it becomes very punitive then to introduce another fixed cost of business. You're already contributing to the tax kitty, whereas the shareholders of your business have not made a single coin. So investors will shy away from this because this is not, they're not in business to be able to raise funds for the government. They want to raise funds for themselves, to get a return for themselves, at the same time acting as responsible taxpayers and paying the fair share of taxes. So this is going to be very punitive. And ultimately, the way minimum tax has been structured, given that it is based on gross turnover, and one of the things I should have said earlier is that gross turnover is a term that has not been defined in any tax law. But having said that, one of the things is that this is likely to be passed on to other consumers. And what will happen is that the cost of goods and services is likely to go up, because remember, there's no investor who wants to put in money just for purposes of funding government. They also want a return. And for them to be able to factor in that 1% minimum tax, then it has to be borne by the final consumers. So this will also make Kenya quite unattractive as we compare to the other sub-Saharan countries. Looking at the gross margins, look, the low margin income companies or taxpayers are going to be affected. At the rate of 1%, there is an assumption that all businesses are going to be making a minimum of 4% as their profit margin. And here we are making an assumption that this profit margin is actually the taxable income that the businesses are going to be paying. So a number of businesses are not in this zone of 4% profit margins. And just to mention a few of them that would probably be in the public domain, one would be around the oil marketing companies. We also have the tourism sector that has been adversely affected by the COVID-19 pandemic. It's unlikely that they are making such margins. We have the retail sector that will be affected. They depend largely on volumes. And right now we are also talking about e-commerce, and e-commerce also is volume-based. And 4%, assumption of 4% profit margin is also not realistic where they are concerned. Looking at the aviation sector, the aviation is capital intensive, and at the same time, the margins that are earned are very low. So introducing this minimum tax on these sectors and the economy at large will mean that quite a number of taxpayers would be affected. And what happens if these taxpayers are affected and they end up closing their businesses in the country would be that taxpayers or businesses do not necessarily only contribute to the economy just through taxes. There are also other ways of contribution to the economy. One would be through creating employment opportunities. So if this is going to be a cost of business that many businesses are not able to foot, then we'll be talking about job losses in the economy. We'll also be saying that the entire supply chains of these businesses will be adversely affected. So we think that this minimum tax is not going to be conducive for the environment and especially for the low margin businesses. And just moving to the next slide, Hilary. If you're just to very generally look at other concerns that we may have with this minimum tax, we do understand and appreciate that the government needs to continue its operations and the government needs to continue collecting taxes, but we do hope that the government also understands that the businesses and the taxpayers do not have this money that they are seeking to collect through minimum tax, and this is going to be very punitive. Just looking at what is happening globally, both the OECD, the UN, and the ATAF, that's the Africa Administrators Authority, we find that they do not advocate for minimum tax to be pegged on gross turnover. And for the simple reasons that we have talked about, the economic distortions that this will have. From their perspective, taxes should be based on profitability so as to uphold the canon of equity. But the moment you go to gross turnover, then we are on the wrong path. And other countries have actually tried and tested this gross turnover basis of taxation. We have countries such as the US that tried this, and this was abolished in 2017. And after that, we have seen that there is some growth in the US. Ivory Coast has currently suspended the implementation of minimum tax because of the adverse effects it has in the economy. Countries within the African countries that have introduced minimum tax are constantly reviewing the minimum tax framework and the minimum tax policy just to safeguard against the negative consequences of this to the economy. If you're just to benchmark from an African perspective and look at this minimum tax rate that is based on gross turnover and compare the rate with other countries, our neighbors here in Tanzania have a rate of 0.5%. I am aware that Uganda tried introducing this year at the rate of 0.5%, but their parliament did not approve this because of the negative impact of the economy. Other countries such as Nigeria also have the rate at 0.5%. The Francophone countries also have this at 0.5%. So again, just looking at the drafting of the law and the policy thinking, 1% is on the higher side and is not comparable to what other countries are thinking about. Looking at also what these other countries that have minimum tax also have, another departure is actually tax holidays. So they have realized that for new businesses need to be cushioned, and we do not want to introduce this minimum tax to new businesses because we do not want to prolong their break-even period. So if we are saying it takes an average of 3 to 5 years, let us stick to that 3 to 5 years. But introduction of this minimum tax means that the break-even period is going to be stretched even further than that 3 to 5 years. So what they have done in recognition of this, they have excluded such startups from the ambit of minimum tax. And with this exclusion, then businesses are able to thrive and they are able to continue starting and launching of new businesses. Another concern that we have is that this minimum tax is a final tax. So we have a situation where you are in a loss position from a tax perspective because you have been granted a tax incentive. So on one hand, you're not paying taxes because the government realizes that you're in a capital intensive industry and they have granted you a tax incentive. And they have told you, take 10 years for you to be able to utilize the losses. And then after 10 years, you need to start paying taxes. But then now minimum tax takes away all those gains that were there. And we are saying now with this minimum tax, we need to pay it upfront. It's going to be a sunk cost from the first year. So I'm not sure that the government is sending the right signals to the investors. So what is this about the incentives that you've given us in the first place if you're going to require us to pay minimum tax upfront? Government also needs to realize that there are some sectors that are very capital intensive and need to be given some time to be able to recoup some of the costs that they have incurred. So in a nutshell, what we are saying in conclusion is that there are very many concerns that this minimum tax raises. We do not want to introduce a tax where in the short run, as a country, we are going to be able to get we are going to be able to contribute to the tax kitty, but in the long run, then there'll be detrimental effects to the economy. The effects would be from a creation of employment opportunities, attracting foreign direct investment into the country. And from an African perspective, just looking at the statistics that have been shared by the UN Conference on Trade and Development, I think in 2018, Africa was able to get about $46 billion. Out of this, Kenya got 3.5% of the $46 billion. So we are saying as a country, we need to ensure that we remain very competitive and we are also able to attract foreign direct investment so that we can sort out some of the issues, the perennial issues that we keep talking about, such as unemployment in the country. So our request to the policy makers, Ondiro, as I conclude, is that we really need to look at the tax policy framework. Let's have all the stakeholders come to the table, look at this tax policy framework on minimum tax and see what is best for this country and other alternatives for collecting this tax, as opposed to introduction of minimum tax based on the gross turnover. And with that said, our prayer is that the implementation of minimum tax is going to be stayed. Let stakeholders come together and let's discuss what other alternatives we have. Thank you, Ondiro.
Thank you very, very much. Let me confirm. Yes, thank you very much for that presentation. It was a really in-depth presentation and you stuck to time. Thank you very much for that. Again, from the presentation, if you have a question, if you have a reaction, or just some thoughts you'd like to share, the chat box is open for a Q&A session. Immediately we're done with our plenary session, then they will be able to take some of these questions. So use that space as you may please with whatever questions you might have regarding the topic of the day. We want to move to our panel discussion. We have a very able panel. Edna has done a really good job in laying the basic facts for us, but we have to put a soul to the conversation and we just have to drive the point home and sort of paint a visual picture. How does it affect businesses out there, or what impact will it have? Now, our first guest on the panel will be Muchai Kunyihe. He is the chairperson of the Kenya Association of Manufacturers. The second panelist will be Rose Mwaura, who's the chair ISPAC. Our third panelist will be Nelson Havi, president of the Law Society of Kenya. And the fourth panelist will be Kwame Owino, who is the CEO, Institute of Economic Affairs. Ladies and gentlemen, can you hear me clearly?
Yes, I can, Ondiro. This is Rose.
Yes, we can hear you.
Great, Rose. Let me begin with you. In retrospect, the government was trying to raise revenue just to buffer itself against the repercussions and the impact of the COVID-19. And that's why it's introducing these new taxes, minimum tax, digital tax. But I want to find out from you, is this a logical way and a sane way business-wise to raise revenue?
Thank you so much, Ondiro. At the Institute, we've actually encouraged the government to expand the tax base. And the reason I'm saying that, you find that there's only about maybe 4 million taxpayers in this country who actually file their taxes out of, I don't know what the population, if you take, we have 47 million population, maybe the adults could be, 50% of that. So out of those, we only have about 4 million taxpayers annually. So at the Institute, we've actually encouraged the government to expand the tax base, including things like the monthly rental income, including, digital services tax and so forth. So that to make sure that more people are actually, or more organizations are contributing to the to collection of revenue. And the government is not just only focusing on persons who are employed, through pay as you earn, and also maybe only on governments, on businesses. So you see, you look at, most countries, for example, if you look at countries like Singapore, there is a lot more focus on sales tax, value added tax that everybody can pay. And therefore creating a business environment where organizations are actually paying much lower taxes. So that they can continue creating more jobs, because the more jobs they create, the more disposable income they put in people's pockets. So therefore, of course, the government is in sort of between a hard rock and I've forgotten that, I think.
So, a rock and a hard place.
Yes, between a rock and a hard place, and they actually do need to collect revenue. Okay. But I think there has to be some well thought out, and I know the argument, as Mushai has said, and I've actually heard it from KRA themselves, is that there's a number of companies in this country that don't actually pay taxes. But they're forgetting that these companies also, they pay things like pay as you earn, and and other taxes like value added tax and so forth. And of course, we've seen that KRA has all sorts of tools in their toolbox that they can use to investigate these specific companies that they're saying have never paid taxes, maybe for 20 years or whatever, and they can, go after them. And I understand, why are they not paying taxes? But introducing this at the point in time where what we need to be doing is allowing or giving more incentives, providing more credit to business to really stimulate the economy so that business can grow. They can employ more people, they can sell more products, and then that allows the business to pay more taxes, and the government actually collects more revenue. Okay. By doing this at this point in time, you're pretty much saying that it doesn't matter whether, we kill all these businesses, and then at the end of the day, we then have, if we can't raise our own revenue as a country, we then have to go to the IMF, and of course the IMF will say you must tighten your belt, you must do all this and that, which I'm not saying what the IMF is saying is wrong, because it's right. We're living in a country today where we're saying our budget is 2.8 trillion, and yet we can only collect 1.8 trillion in a good day, meaning that we're overspending. Even in your own household, you must live within your means. You cannot go and borrow money so that you come and eat. You must try and live, so the government does need to collect the money, but one thing, there's also the macro aspect of it. One, we really must cut back on our expenditure. We must live within our means. And we then must also focus on stimulating business, giving business incentives to then allow business to grow, expand, invest. And that's why some of these investment allowances are really, and capital allowances are really necessary to allow business. And so business is able to employ more people, pay those people salaries. Those salaries then go to, in the local, economy, they pay VAT, and therefore then we come back to a thriving economy.
Okay, Kwame, let me cross over to you. In January, the minimum tax will come into effect, but bearing in mind the kind of year that not just Kenya has had, but the global economy in general, is it a good time to introduce a new tax?
Certainly not. I think, even if you have to go about with or rather, let me just say that the two things that I have mostly against this tax is the fact that the timing is extremely poor. There's never definitely a good time to raise a tax. Taxes always cause distortions, but I think you can never have anything worse than the timing that we have now. Because the assessment was obviously that initially there was a thinking that one quarter would be lost to COVID-19 adjustments, it's clear that it's going to live with us for a much longer time. So when this tax is introduced at this moment, starting again in January, simply tells you that, well, this is a money grab, meaning that government isn't prepared to make adjustments in other areas in order to. So obviously, I think introducing a new tax together with the compliance requirements is very bad timing. I think the second is just basically, obviously it raises the compliance costs of everybody else. And my thinking is that it's not going to raise as much money as is anticipated. So obviously you'll be wasting the moment to actually introduce a lot of bureaucracy because of course, the kind of accounts keeping that firms will have to do in order to ensure that they comply will be costly, only to find that we're not going to raise so much money from it, because obviously you need to net off to find out whether it's effective, to net it off from what taxes people would have paid anyway. And I'm not confident at this moment that the timing is right, and either that it will yield a lot of money. So it's a completely inefficient tax. Thanks.
Great. Daniel, let me cross over to you. Something that Kwame has raised: one, compliance, and two, what does the law say about introducing some of these new taxes that when you put on a weighing scale, the disadvantages outweigh the advantages? For the viewers, Daniel is standing in for Nelson Harvey, who could not join us today. Daniel.
Thank you so much, Ondiro. I think, it's, I agree entirely with everything that's been said this morning by Edna, by CPM Ora, by Kwame, that firstly, the timing is wrong for this new tax. Secondly, the tax in itself, I think, needs to be more carefully thought through. One of the issues that I think was brought out is that you have lots of companies that are actually have some turnover, but are in a tax loss position. Some examples which can be named are certain airlines that we all know of. They will be required to pay taxes, notwithstanding the fact that they have been in a loss-making position, particularly with a backdrop of COVID-19. But in addition to that, there's an issue that has been touched on, has been spoken about, but the government has not really paid much attention to it, that actually the way the law has been drafted, there is a clear drafting error on the face of the law. Now, the way the law has been drafted is that it actually states that the new law, the new tax, the minimum tax will be payable where it is higher than the installment taxes. So now there's confusion in the marketplace, because you will end up in a place where, on a strict construction of that law, of that provision, you will end up in a scenario where a company could say that I need to choose between paying installment taxes versus the payment of minimum tax. And because I have hit the threshold for minimum tax, that is the relevant tax I should be paying. So the way it's drafted is actually wrong, and it will cause great confusion, particularly for those people who seek to apply it looking at the new regime. So there are two reasons why the timing is wrong and why they shouldn't implement it come January. The first one is that the timing is wrong and it will result in companies that should otherwise not be paying taxes to pay taxes. The second one is that there is a drafting error. And until that drafting error on the law is amended, you're actually going to be resulting in applying a law that will cause more harm than good. So I think the government needs to rethink it as a whole. I think the final is that we have been waiting for guidelines to be issued to tell us how they will implement some of these issues. Today is the 26th of November. We're yet to see the guidelines. And for a new law that is intended to be implemented in January, the time is actually not on our side. So I think when you look at the net sum of all these issues, government needs to think about how and when, particularly in light of this issue. Thank you.
Okay. Mushai, let me bring you into this conversation. You're in business and you're the chairperson of the Kenya Association of Manufacturers. These are people in business. And as Daniel has rightfully put it, it's out there. There's some businesses that have been making losses prior to the COVID-19 pandemic, and the COVID-19 pandemic has put them in worse spots. What good does it do, or what detrimental effect does it have when we tax loss-making businesses?
Yeah. Thanks for that, Ondiro. I think like we mentioned earlier, it's just worth reiterating. If there were people being targeted because there was a feeling that there are companies that make profit, but because they have investment deductions or other benefits, and I think we mentioned some like in the power sector, manufacturers, I think in tourism, sometimes in hotels, they don't end up paying taxes because they have a tax loss not necessarily an accounting loss, but they have a tax loss. But the thing about the minimum tax, it has not distinguished between a tax loss and call it an accounting loss or an actual operating loss. So what is going to happen is that there are businesses this year, and that's the sad thing when we are saying to government, we need to be very cognizant and cautious about this. There are businesses that are actually making losses. They are making both profit and losses. They are making cash losses where they've actually lost cash in this period just because of the challenges of COVID and the pandemic. But now you're going to be asking them to pay again. Now, these are businesses where they've had to go and find other funding, either from the bank or from the shareholders and the owners of the business. They are digging into their pockets just to keep alive. What the tax is telling us is that you need to dig even more to pay the government just to be alive. And like we said, again, I think there is some clarity to be made around, Daniel mentioned about what turnover you're talking about. Are you talking about last year's turnover? So for instance, if you ended your year in March last year, you'd have had a very good 2019. And I think Kenya Airways might be falling in that category. You had a very good 2019, very high revenues. So if they decide to base your 1% on those revenues, you are then again digging even deeper into your pocket with money that you don't really have. So again, we are just saying that, look, if you had certain people you are trying to say that, look, you need to target them. Like in other countries we've heard, they say every 3 years you must pay some level of taxation. So then that says, okay, yeah, there's a 3-year thing. But this is the year immediately after a pandemic. And you are then telling people, no, you're going to have to give us more of your equity or borrow money just to stay alive. And a lot of businesses sadly are going to have to make hard decisions, and some of them are going to end up closing because of, we are not going to be able to survive just to pay the government. So it's those hard places we are saying, government, can we think about this tax and make it reasonable so that we are not wiping out people who they were not even when they tell you the purpose of the tax, they were not the intended target of the tax, but it is so blunt and it is so wide that it's covering everyone, and it's going to end up with a lot of people suffering unnecessarily. Thanks, Andrew. Sound.
Kwame, I want to pick up the point that Mushai has briefly brought about, and that's the economic ramifications of these taxes, not necessarily on businesses that are making losses, but on businesses in general. What are some of the downsides of asking businesses to be paying 1% of their gross turnover in four installments in a year? What kind of impact will it have on existing businesses, on new businesses, and on people who want to come into the country and set up their businesses?
Okay, well, it's not clear to me yet because it depends on how that is implemented. But obviously, if you're a business and you know two things, that you have thin margins, and that what happens is that you're judged on the basis of turnover. And at the same time, because you're paying for this on a quarterly basis, you think that turnover should be at the end of the year. So it means that when you have a good quarter and you're judged on the basis of that turnover, then that amount of money will go in. That amount of money would be the basis upon which your minimum tax is paid. I think these are the distortions and the things that are not clear to me yet, but obviously it shows that business payments would also be subject to the cycles, to the business cycle, in the sense that some quarters generally do better than others in Kenya. And if you're paying on the basis of that quarter's returns, you might be paying money only to lose in the next. So I think the adjustments that might have to be made would actually be much higher. So I'm not too sure what problem is being solved here. I think what's clear to me is it's a very cynical way of trying to collect taxes, if you ask me, because it's based on the fact that, look, we'll collect taxes from you, we'll gather revenues from you, regardless of whether you make losses. And if the additional 1% pushes you away from profitability, then so be it. That firm should collapse, suffer, or borrow some other money from somewhere else. I'm not too sure that's a good signal for a business person to have to deal with. But the final one is actually parallel systems, because as one of our panelists said, that one of the things that businesses will have to make a choice is under which regime do I report, right? So if my turnover exceeds a certain amount, obviously it means you're in one level or the other, but there are people right of the margins who would have to think, under what regime do I support? Which might suggest that you actually need 2 books kept, or keep your books into, of course, the software that probably would do that, but it would have to be configured, but you're keeping your books to ensure that under what regime do you owe what, and at what time do you cross the threshold, and therefore apply under one regime or the other. I think it's just making parallel systems and an unnecessarily complex tax regime in Kenya for no reason. When the truth has been, I think one of those tax policy laws intended to have a simpler tax system. So obviously 2 years after that policy was passed, we are going for a more, the country is going for a more, Parliament is choosing a more complex system. So I think that's not a good signal overall.
Daniel, I want to cross over to you. Kwame has raised a very important point that in this quarter, you might have had a really good run, you've made money, but in the next quarter, you are running into losses, but you've paid a lot of money in the first quarter, and in the second quarter, you're running losses. From the law's perspective, is there room to sort of work around some of the economic shocks and the market so that everybody can pay their fair share? And by fair share, I mean we can be able to look at the 4 quarters and then decide what should you pay.
Thank you, Ondiro. I think, this is going to be one of the most troublesome issues, because the way it's supposed to work, and that's the reason why everybody is expecting and waiting for the guidelines that are supposed to be issued, is for people to understand, is this an advance tax that you pay, or is it a tax that you pay and basically it's done and forgotten? Now, what I mean by that is, if it was the case that the law allows you to make a payment of this new minimum tax, and that amount is then set off or carried forward as a credit for it to be set off against future taxes that are due from you, then perhaps it would be more palatable. But the way currently the law is drafted is that it is not an advance tax. So when you pay it, it basically is lost, if I may use it that way. And the next quarter, if you were to make a profit, it does not take into account that you paid minimum tax in the previous quarter. So it becomes very problematic as currently drafted. Now, the National Treasury, as we understand it, is aware of the issue. They had said that they would come up with some guidelines. The problem that we are faced by is that the way it works is that when you have drafted a law, because now the provisions of minimum tax sit in the Finance Act and have amended the provisions of the Income Tax Act, ideally guidelines do not have the power to amend the law. So what really should be happening is that the government should be enacting a new legislation that actually amends that provision and gives us more guidelines on the way that new law is interpreted. So we are waiting what the government will come up with, whether the guidelines will assist in closing that gap, or alternatively, then the question then arises, should the government really be telling us that they're going to be enacting a new Tax Laws Amendment Act? We are anticipating, because we have been told that the COVID measures will not run into the new year, that there is going to be a Tax Laws Amendment Act. And perhaps the real opportunity for the government is, in addition to the amendments that need to be put into force to deal with the COVID issues, for them to also change the law on the issue to do with minimum tax. As it stands today, the question that you've asked me, is there room for maneuver? The answer that I can give is, unfortunately, there isn't, because as currently drafted, the tax is actually due and payable for you, and it is not an advance tax, until and unless we see that the National Treasury will amend the law in the coming days. Thank you.
Mushai, if the law comes to action, January 2021, businesses will have to pay, but somebody will have to bear this cost. And these costs are always distributed along the distribution and consumption chain. What does this mean for business, for consumption, for pricing and movement of products in the long run?
Yeah, I think it's hard to tell what will happen in the future, but what we've seen in the past and what you can probably safely foretell going forward is there are a couple of things that will happen. One, obviously the cost of goods will go up. I've seen on the chart, for instance, we had Steve Miner contributing on one of the questions and talking about his distribution margin. His net profit margin already is below 1%. So what is he going to do? He is going to have to raise, if he's going to survive, he's going to have to raise the price of goods by that 1% just to be able to pay the tax. So we expect some costs to go up. That's one of the things you can expect. Two, and I think, which is a sad thing, because earlier on, I think Rose Maura, chair of ISPAC, mentioned that we are trying to bring more people into the tax bracket. And that's all about also making tax easier to pay, making it a little bit more palatable. You know, if your taxes are very high, you generally get less tax compliance. So I think one of the other things, like Kwame was saying, when he talked about alternative or parallel systems, that there is going to be the illicit parallel systems, because we are going to go back to people. There will be people, because you're tempting them. You're saying, look, maybe we start working on cash now or other systems. People will go to that illicit system, which is very bad for us as an association. We always see that as problematic, because once people start breaking those rules, they'll start breaking all the other rules. And that's not useful for manufacturing or for anybody in the business, because it is easier when we are all operating on the same rules. Nobody has a competitive advantage out of one tax or the other. And finally, like I mentioned earlier, I think sadly that there are some people who will just decide that this business is not worth doing. Whether they're international businesses who are coming into the country and saying they'll pull out, but also local businesses. I think sometimes we have a challenge convincing government or explaining to government that, you know, people don't do business as, there's no obligation for us to run a business or for anybody to run a business. People can always change. They will cut it. They will decide to, whether it is to emigrate or to do something else, which is generating more cash. I can see somebody who had a distribution system in Nairobi deciding to go back to the village and just grow tomatoes. They will have a living and they will be able to continue, but they will be totally outside of the tax bracket again. So we are now pushing informality rather than getting people to be formalized. And it will stop more people becoming formal and formalizing their business. It will be more attractive to be informal, because that's where you'll be able to survive. So those are some of the challenges we see, especially just the inflationary one will be big, because people will start, a lot of people also on the chat are saying, it will be just like VAT. They'll just add it on like another VAT, because it's a cost that they're going to have to be charging people. But again, it is not as simple as VAT, as Daniel was explaining to us. Even the mechanics of how you implement it will be complicated. So that again will be a challenge. Perhaps maybe just to add that I can see in 2-3 years, there'll be a lot of maybe happy lawyers and accountants, because there will be a lot of court cases about the implementation of this tax. And as a lot of people arguing with KRA, what should I have paid? What should I not have paid? So those are possible futures if we don't do something about it now.
Rose, thank you, Mushai. Rose, when you listened to the government speak yesterday, the PS Treasury was speaking during the Kenya Economic Update by the World Bank, and they said the VAT will go back to 16% where it previously was, and it's among the lowest in the region. And when the government is trying to defend its tax policies and its tax regimes, it always says it's the cheapest in the region. But when you look at a country like Tanzania that has this sort of tax, it's at 0.5%. The government is adamant that it has to make money, but maybe would it have capped it at 0.5 or maybe 0.3 for a start, see how it works, and then progress as time goes by and as the business environment improves?
Thank you, Ondiro, for that question. You know, when the PS says it's the cheapest, you know, you cannot look at taxes in isolation. You must look at the entire cost of doing business in this country. When you look at the cost of electricity, for example, I think I'm in a forum where somebody posted the cost of electricity. In Africa, I think Kenya is pretty much at the very top, and countries like Tanzania are actually way much cheaper in terms of our electricity. So when you look at that, you look at all other inefficiencies, you look at the fact that if you're running a business and you have a manufacturing plant, let's say in Nairobi, and you want to go sell your products in Nyeri, or you want to go to Nakuru, you want to go to, Kakamega, all those other counties are levying some taxes on you. KEBS wants some money from you. NEMA wants some money from you in terms of all that. So the cost of business cannot be looked at in isolation in terms of saying that ours is the cheapest. So in our thoughts, it might be even better to just go back to the 16% regime in terms of value added tax, because then the government is able to collect. And I think they're going to do that anyway in January, as compared to the introduction of this 1% and the impact that it will have on business in general. So in my mind, and in the mind of ISPAC, there needs to be a national discussion around the cost of doing business in Kenya, and not just necessarily from a tax perspective, but from all these other taxes and levies and fees, of course now plus the taxes that KRA is levying, because at the end of it all, when you look at all these things, it then becomes pretty much unsustainable for companies to do business. And when it becomes unsustainable, you'll either put it stop the business and go do something else. Of course, businessmen are rational, human beings in economics language, and they will deploy their capital to where they can get a maximum return.
Mm-hmm. Thank you, Rose, for that. Kwame, let me bring you in. The tax environment in this country is very unpredictable. We had presumptive tax, turnover tax, minimum tax, digital tax, and it keeps changing. The government is always sort of trying to adapt to whatever financial hailstorm it is going through. But what does this unpredictability say about our country or financial situation? And what does it mean for business in the long run?
Okay, I think the first thing for a businessman is just that you have to juggle far too many balls. Because say if you have a manufacturing plant, for instance, you have VAT and VAT returns, records to manage, you have your clients' records to manage, or your sales on the other side, so that you can calculate all the revenues. So that complicated system is just one that's completely. The other thing it signals, in my view, is that, and this I place squarely on Parliament as well, as Bashai mentioned at the starting, I think Parliament needs to ask because Parliament seems to not decide for itself what taxation policy we should have. Instead, what it does, it reacts to what the Treasury and the KRA think are the ways to maximize tax collection. Now, there's no principle of taxation which says that the function of a tax is necessarily just to maximize collections. Because if we wanted to maximize collections, then a totally different regime would be applied, as opposed to this kind of, whack-a-mole. You're trying to shift everything here and there. And the final one is, it's true. It just gives tax lawyers and accountants, to be honest, a lot of work to do. Now, whether that is expenditure that is useful for farms or not is a different one, but obviously it raises everybody's costs. So what this thing tells us is, I think Parliament and the Treasury should actually decide, are we going to follow the tax policies that we claim we are seeking? So if you want to widen the tax base, then you widen the tax base using the simplest tax problem, and one that also does what? That reduces the compliance cost for everybody. Secondly, many places when you raise taxes equivalent to what Kenya does for our income level, then when you are shifting one tax for the other, what you do is something that's called tax neutrality. So you are going for a more efficient tax system, but you're ensuring that the total collection is not higher than what it is. So basically, you're just trying to make sure that you bring more people into the tax system, so that obviously the burden is shared. But as it is, when it comes to VAT, we are seeking a different goals. Income taxes are different goals, and when you mix those two together, as many firms have to, because you have employees on employees on the one side, and you also have to make your returns, it's just a total mess. And what we have, to be honest, is far too messy to be a decent tax system. And that's why every few find tensions that we need to readjust them. So to adjust one side, you're creating distortions in other places. It's just a mess.
Okay, and you've mentioned something that I want to throw to Daniel Ngumi. What are some of the disputes that are likely to arise from the implementation of this tax regime come January next year? But before Daniel takes that, remember the Q&A session is open post any questions you have there. Some will be answered on the chat box, but in a few minutes, we'll start taking them here and the panelists can answer them. Daniel.
Thank you so much. I think before I answer that question, I'll just latch on what Kwame has just said. And he says that the country lacks a proper tax policy. That's why we find a new tax law coming in, the next day it goes away, and there's a lot of confusion on that. In fact, I think, Winston Churchill once said that a nation trying to tax itself into prosperity is like a man standing in a bucket and trying to lift himself with a handle. So in reality, it's almost like, you're doing zero work in that sense. But just moving to your question, what do we think in terms of tax disputes? What we have seen is that increasingly, because of issues that are not clear, ambiguity has become a big. So lots and lots of cases that we currently have in our courts are being determined based on the question of ambiguity. Construction of tax laws requires that tax laws are clear and ambiguous, and when you read it, it should be clear to you what you're supposed to be taxed. There's a lot of case law flowing from Europe and particularly from the UK. Also Kenyan tax law now, cases which have been decided that where there is any ambiguity, it is construed in favor of the taxpayer. So this is the real problem when it comes to drafting laws that are not helpful to the nation. That ambiguity then creates an issue, and you end up in a scenario where the decision will almost automatically be decided by the courts in favor of the taxpayer. We can give you illustrations and examples. So for example, there is a matter that for the bottlers, where there was a question as to whether the bottle itself is taxable or whether the fluid inside the bottle is taxable. That matter took 10 years, ended up in the Court of Appeal, has now gone to the Supreme Court. But ultimately what the Court of Appeal decided is that because there was ambiguity in the law, the ambiguity was going to be construed in favor of the taxpayer. So the reality, when you look at the whole length and breadth of this issue, is that it is much more helpful if the Kenyan government, the National Treasury, the Kenya Revenue Authority sat down, drafted laws that were going to be clear, thought through the policy, and then implemented something that was going to be for the benefit of the nation as a whole, which would then not subsequently need to be challenged before a court of law because it would be clear on the face of it. And that is the challenge that they now have on this minimum tax issue. And it is a real challenge because as it currently stands, almost certainly, if they do nothing, in January, you will see it being challenged before a court of law for various reasons, including ambiguity, among others.
Okay. Now, we've covered so much ground, but before we go to the conclusive phase of the conversation, let's cross over to the chat box and see what are some of the questions that are being raised there so that some of our panelists can take them. I'm seeing there's a question here by Priyesh Shah who says, what are the thresholds for minimum tax? Rose, you can take that.
Yes, the thresholds for minimum tax is 50 million shillings per year. So if you have gross turnover, that's your sales, I think, but as you've heard from the tax experts, Edna and Daniel, that that term gross turnover is not defined in the Income Tax Act. But I think right now it's at 50 million shillings. If you're below 50 million shillings in turnover per year, then you're subject to all the various other taxes. I think, Edna, if you can just clarify that for me.
Yes, you're right, Rose. Actually, the threshold is 50 million Kenya shillings, after which you're within the ambit of minimum tax. Thanks.
Okay, so anonymous attendee here says, all President's COVID-19 tax relief measures will be reverted to usual by 1st of January 2021. However, all revoked tax incentives shall remain revoked, and contrarily, new taxes like minimum tax will be levied. How is it fair for those manufacturers who are to enjoy tax release and instead will now need to pay minimum tax? Moshai, you can take that one.
Yes, I think I was seeing that question and noting, yeah, we will have a problem is that actually we will in effect have raised taxes in the middle of the COVID pandemic, which I think is probably worrying, like we were saying before, because governments around the world are trying to help people. At best, we should stay neutral, at our taxation level. But having raised taxes that would be the net effect, because you got a few benefits, they give you one or two things, and then they've taken 5, 10 of that. So that will be a big challenge going forward. And we now start becoming again a high taxation market. And in terms of the philosophy of taxation, to some extent, it's always a question of whether, if taxation is to help us as a society do things better, there's always a question of who will be better placed to use any money or resources. And I think generally, well, the side I come from, I think private individuals, whether they are companies and also individuals, they can make better choices that are useful for the economy rather than the government trying to make those choices for them.
Okay.
And secondly, we find, I don't know, there seems to be like a race to raise more money. And although we are very active in the ease of doing business, I'm yet to see a global competition for which country is going to raise more taxes than another. So we need to get off that treadmill of keeping to want to raise more and more taxes, because that doesn't take us anywhere good. Thanks.
Okay. Kwame, you could take this one by Bob Karanja, who says, this new 1% income tax, which sectors are likely to be impacted?
Well, maybe that should have been done by the accountants, and the business people. But I think it's, as you said, if the threshold is 50 million Kenya shillings, that's by Kenyan standards a fairly big business. But as you said, obviously, they tend to be also businesses that have highly capital intensive. So obviously that would be, as we've seen some comments here, there'd be retailers, wholesalers, some manufacturing firms with very thin margins, even if the capital that is required is very, very large. So if you see that, it might even actually have some agro-processing and other firms that are in the business. So it'll cut across, and that's the other thing. 50% threshold tells you something about how taxes are constructed in Kenya. So you choose 1% minimum tax arbitrarily, and then you decide that 50 million sounds like a good number, and you put that arbitrarily. So obviously it's going to affect manufacturing firms and firms that tend to be capital intensive in the sense that they're big, but that doesn't necessarily mean that their incomes are high. So obviously, I think that's where they are. But I've seen a number of people talk about retailers, especially retail firms, wholesale firms, and traders who require huge money to be able to meet supplies and do the logistics, but whose margins are not necessarily that high. And for some of them, this might actually take them very, very close to being insolvent.
Mm-hmm. In line with what you've just said, Kwame, there's a comment here by Steve Miner who says, I'm in retail distribution with very high turnover exceeding 500 million. However, my gross margin of about 3.5% and net margins of 0.7 to 1%. It is not feasible to continue this business from 1st of January 2021 if government will expect me to hand over 1%, as this constitutes all my net. I've seen Wamboi Mbarire from Retrack. Wamboi, maybe you could react to this just a minute.
Thanks, Ndiro. I think Steve captures it very well. I think I had mentioned earlier in the week that no one in the retail sector makes a profit of more than 1%. And to do that, you'd really be exceptional. So to start paying the tax, you're already taking us into negative. We're a high volume, low margin. If you work with the gross margins, you really will kill the businesses, totally will. So I want to agree with Steve. He's really hit the nail on the head. That is the reality of what implementing that minimum tax will be.
Mm-hmm. Thank you so much, Wamboi, for that clarification. I am seeing here one that can be taken by Edna, and Joseph Kinuthier is asking, how will minimum tax allow implementation of the following capital deductions specific to sections charging specific industries?
Yeah, thanks, Indira, for that. So one of the challenges that we are having is that there is actually a disconnect in the income tax law itself. So on one hand, there is expectation for you to pay minimum tax, but the same law does not recognize that there are also incentives such as the capital allowances that are granted. So it means that this would be clawed back through minimum tax, which would be very unfortunate from an investment perspective. Thank you.
Mm-hmm. Okay, another here by Hasnain Jagani, something that Mushai had briefly touched on. This tax will cut out middlemen, and the multiplier effect of the tax will increase inflation. If I, as a manufacturer, operate in a 5-tier value-added system, so I buy 2 tiers of suppliers, so could be someone who gets raw materials, sells it to a processor, who then sell me an intermediary product, then I process it, sell it to a distributor, who then sells it to a retailer, then the effect of this tax is 5 times. It is unfair, and manufacturers would be better and be better for importers. It would be cheaper for the distributor to be the importer, and he would only pay on his 30 million. Mushai?
Thanks. Yeah, that's actually an interesting approach to this, but you can actually see that what will it do to local manufacturing as opposed to importers? And there will be a big challenge because yes, that tax is being paid multiple times and being charged. If all my suppliers are local, and remember that for local manufacturing, what you're trying to do is create a network of suppliers who supply each other and then make products which are either consumed here or exported. So that network is important. But if now I'm going to be charged each time I buy paper, I buy a jar, or I buy anything else for my packaging, and all of them are raising their prices, then yes, there's going to be an effect on everyone. Worse still is what is the risk if one of them goes, if my paper supplier is no longer there, or there's somebody who supplies me a particular raw material and he's decided to close, it stops my industry entirely because now it becomes easier for me to just import finished product. And it could have a long-term effect on manufacturing. I think the more pernicious one as well has been around investment deductions, because what happened earlier in the year as well, investment deduction was reduced from 100% in the first year or 150% if you are outside some particular counties or towns, the big industrial hubs. And that's now been it's nugatory because they're saying the benefit you are gonna get by avoiding or by not paying tax for a year or two, as you recoup the cash that you have put into the investment, you now will not get it because you are still going to have to be required to pay 1% of your turnover. And that ignores certain things because one, your investment may not be equivalent to what your turnover is. I may just be doing a small part of my factory, not the entire factory, so I'll still be charged. So the attraction for investment here is going to be challenging in the coming years.
Mm-hmm. Let me throw this to Daniel Ngumi. Steve Miner asks, can CAM and other bodies file a case in court to stop the implementation of the minimum tax in the meantime?
So I think, it's a question that has been asked by many people. In January, it may be one of the options that will need to be considered carefully. Usually what happens, and the best way of dealing with this sort of issues, is to have the government itself realize the issue through efforts such as what is going on now, and mutually the law is amended. Because in reality, the process of changing the law is often the easiest route through lobbying. Now, if all else fails, then one of the ways that people could consider is finding whether there is a constitutional reason for challenging the law. A law can be challenged primarily on the basis that it is unconstitutional. So it would have to fall in one of the buckets for being unconstitutional. Either that it is taking away property arbitrarily from taxpayers, or that it is unfair, or it is inconsistent with the provisions generally of the Constitution. So, so I think it is one of the things that could potentially eventually happen there are many people who are talking about the impact that this minimum tax will have on businesses, and it is largely being seen as being an unfair and an arbitrary use of or taking away of property. But as I said, perhaps the real effort should go to trying to lobby and change the law, and failing which, then there are options, including going to court.
Okay, we'll come to that during our conclusive segment, but I want to throw this on to Kwame. Bahrat Shah says, from past 1 year, I see Treasury is not listening, but stick to their point for tax purposes. From that point, it would be prudent to consider 0.25% turnover tax with review after 2 years. Further, we must begin to have at least per year remain, that is pay as you earn, remain at 25%, which will allow spending in the economy. The point is, we need to trade off to create a win-win position. Kwame?
I agree. I think one of the things I was going to mention is that the reason part of Kenya's tax policy is also a mess is because we don't have what are called the sunset clauses, which is to say a tax might be, for whatever purposes, relevant today. But I think Parliament needs to, and this is Parliament's responsibility, needs to ensure that you don't lock in a tax forever. I mean, a rate or tax forever, so that there's a legal instrument that requires its revision. So I agree completely with the view that this could have been. The second point I was going to state as well is, yes, especially because as we've been advised by Daniel, it is clear that this tax is not like an advance tax, which means you net it off your tax obligation at the end of the year. So it seems like it's actually an addition to what the obligations are, making the tax rates actually much higher. What then should have happened is whatever signaling the Treasury thought was necessary, Parliament should have actually limited this tax to a very small amount, 0.25 maybe or so. I mean, the arbitrary choice of one is actually just raising taxes by stealth. But it's clear that I think this tax should not survive both in terms of its quantum. It should have a limit date when it would actually, its effectiveness would be reviewed. So whether it's 1 year or 2 years, that would be useful. But more importantly, I think the window should be opened to ensure that it lapses after some time. And it should be a practice that Kenya's Parliament should adopt for all policies on taxation going, moving on from here. Thanks.
Upin Vasani here says, why introduce minimum tax? Just tweak the regulations around installment tax, and that makes life easy for everybody. Rose? If Rose is not in, Edna can go.
Yes, thanks, Ndero, for that.
I'm there. Okay. That's fine, Edna, you can go.
Yeah, so the reason why the government has introduced minimum tax is this is actually a way of collecting more revenue. So I don't think they are going to get any more tax from installment taxes. And that's why they decided to bring in a clever way of trying to raise more taxes from the existing taxpayers. So unfortunately, what this does is actually deepening the tax base as opposed to broadening of the tax base. Rose, you want to add?
No, yeah, I was going to say exactly the same thing because the installment tax is already set, on a quarterly basis at, 30%. And of course, this year, after April, it had been reduced down to 25%. So that was not necessarily going to net any more money. And again, it was at a net profit level. And therefore that's why the 1% then comes in separately. But I think the key thing is really I think, as has been said, government and Parliament especially needs to actually listen to business, because this matter, when it came up in June, there was a lot of, for public participation, there was a lot of input from the various organizations, including ISPAC, the BMOs, various businesses around the particular tax and other matters. But it's just one of those areas that they were not, willing to listen, and therefore it went in for legislation. And now, barely 6 months later, we're really saying that they must put it in abeyance and actually talk to business and think through it.
Okay. One final one here from my senior and esteemed colleague Ramanyang. We'll throw this to Daniel Ngumi before we go to our closing remarks. Possible, but it will be a crowded schedule MPs will get back to. There will be a supplementary budget or two for legislators to deal with, not to mention a potential legal fight with KRA, who may say, well, the minimum tax was in place from January to February 20, assuming that's when it is removed. So we still want that payment due. Like you said, there will be many legal fights ahead. Daniel, 30 seconds before we get to closing remarks.
Well, I agree entirely with what Ramanyang says. The reality of the matter is that if the law is going to be enforced, nothing happens till 1st of January, then we should expect that it's going to be a rough ride, both for taxpayers, for KRA, and possibly also for the National Treasury when it comes to the implementation of this new law. First of all, because of the impracticalness of it, the costs to the business. Secondly, because of the possible legal challenges that will be levied by, amongst others, LSK and other quarters in Kenya. Mm-hmm. So I think you're right that the legislative calendar is very narrow, but presumably, as I had mentioned earlier on, if they intend to actually change the COVID rates that have been already said that they are going to do, they can only do that by a new law. That new law would be the ideal same legislative piece that should make the changes on minimum tax. In any event, we're waiting for the guidelines, and I think that those guidelines may help in terms of trying to clarify some of the issues, failing which we do need to change the law, failing which again there is the legal challenge in court. So as Rama says, it's going to be quite an uneventful first quarter of next year, assuming that nothing changes on this issue. And we can only hope for the best. Thank you.
Great. Edna, your closing remarks. What sort of tax policy do we need in this country to create a consistent tax regime so that there are no new taxes introduced by Treasury and Parliament when there's a financial hiccup in the country?
Thank you very much, Ondiro. I think the first thing is that we need to have a tax policy, a national tax policy, as was alluded to CPA Rose Maura. This policy needs to undergo public participation so that we can also be able to get the buy-in of taxpayers before implementation of this law. And from a policy perspective, businesses are looking for stability, for predictability, and we do not have to look at collection of tax revenue as a policy in itself. We need to look at all the economies, the sectors of the economy, and see what would be the best regime for each sector of the economy. Thank you.
Rose, pick up from where she's left. That sort of differential diagnosis. Who do we tax? How do we tax them? Is this something that we could approach moving forward to ensure that the government raises revenue, but everybody pays their fair share, bearing in mind the business that they operate in and the nature of their business?
Absolutely. And as Edna said, we've already made those proposals to government. But I think the bigger thing about here is really broadening the tax base. Bringing in more taxpayers, to more Kenyans to pay taxes. As I said earlier, we only have 4 million Kenyans who actually pay taxes out of maybe a potential, perhaps 20 million, people who should be paying those taxes. So then it becomes so important that one, we make it easy, to pay taxes for everybody, so that, and then we bring in, different types of economic activity. People can actually pay taxes, and not just focusing on, I would say, the people who are employed, and businesses to pay all these taxes. I think there really must be a focus on perhaps, as I said earlier, making it easier for businesses, extending credit and so forth, so that, and possibly even reducing, taxes like the income tax rate, the corporate tax rate for businesses. So that, because the more money that businesses are able to, to give to their staff and to maybe pay for in the value chain, so to speak, the more money we're able to have circulating in the economy, and therefore, again, we can then have a more vibrant economy. But all those things really must be thought about from a national level in terms of what does our economy look like in 2020 and for the next 10 years and so forth, and what taxes do we need, not only just to collect money for the government, but to actually rejuvenate the economy as a whole. And of course, I cannot close without saying that that the government must really look at our expenditure. Part of the reason why there's so much pressure is because we're spending much more than we're collecting. We're only collecting about 1.6, 1.8 trillion shillings. And yet every year we keep on budgeting for about 2.8 trillion in terms of expenditure. And of course, the loans that we've borrowed. So we must really be very, very serious about cutting back and on our expenditure for us to reduce the pressure that is on everybody as on business. Thank you so much.
Okay. Thank you. Mushai, as the chairperson of the Kenya Association of Manufacturers, you strive to create a conducive business environment for business in this country, not just for local manufacturers, but international manufacturers. And it's policies like this that sort of are a hiccup and take you back to where you came from. Where do we go from here in terms of ensuring that government gets its fair share of taxes, but businessmen can operate in a profitable environment without feeling like they're choked by taxes day in, day out?
Yeah, thanks, Ondiro. I think, well, maybe Kwame would be better placed. It's more of an economist question. But I think from a business perspective, what we can say is that, look, what we know we need in our country is incomes and jobs. Jobs will bring in the incomes. We think manufacturing is one of the cores that can actually build jobs because of its multiply effect. It tends to create other jobs to supply the manufacturers, which is why it is even part of the big four. I think the government, all governments from 1963 have recognized manufacturing as an important part of our economy. But now, and I'm speaking about it from a manufacturer's perspective, we really need stability in the tax regime. But the core thing that is going to bring manufacturers here and help the existing manufacturers here is productivity and competitiveness. We have to be able to produce at a price, at a quality that can compete globally. Right now, we are signing new trade agreements with other countries, but irrespective of those, we will either become now an import country because we've opened ourselves to other markets. People will be bringing in their goods, but we must be able to make things that are good, that people want to buy. We admire countries like South Korea and even now China, Thailand, the Asian tigers. What they did is they just became productive. They can produce good quality things at a good price. So when government is introducing taxes and so on, we need to start thinking, how is this going to affect productivity? Is it going to help our manufacturers produce? Because what we want them to do is produce and export. Again, export being a big part of what we need to grow so that they create jobs that will create more incomes. Again, I think it has been mentioned, we understand corporate tax is not the only tax that is created. You create jobs, you create pay as you earn. How about we start thinking about this, instead of this 1%, how many jobs do we need to create to pay this pay as you earn that will create this? And we start thinking in that direction of, let's create the jobs, those jobs will create the revenue and the taxation, the VAT. Thanks.
Mm-hmm. Kwame, finally, we give you the last go. When you look at everything that's happening, things are tough. KRA is always missing its targets. And earlier on, you mentioned the government might not even collect as much as it hopes to collect from minimum tax. To mean it's in dire need of cash. I don't know whether minimum tax will work or not, but where does this leave the government in terms of putting its financial house in order, and how can it go about that? Because obviously taxes look like they're going to be a battlefield.
Okay, I think two things. The first one is just that we need, Kenya's tax policy needs to reflect the kind of economic model that we have. And now this is an economy where we have a lot of young people. There's very high dependency. And relative to other parts of the world, we have very few farms. most people are in labor and the farms are actually small. And so we have a total of something like the top 200 farms in Kenya in terms of taxes contribute almost 80% of all corporate taxes. So it tells you that there's something that needs to. So our tax system should reflect the reality of the Kenyan economy. So when we design our tax system based on minimum tax, which comes from the US and other places, I think it tells you that we are barking at the moon, basically. So that's the second one is just disciplining public spending. To be honest, this problem is a spending problem. It's not a tax problem. If you look at how much taxes are contributed in Kenya relative to the gross domestic product, it's close to 90, the largest actually in sub-Saharan Africa. And that's the tax take as a share of the GDP. It's very, very high. It's very high. And it's the largest in ESC by almost 5 points for each of the countries. So in a way, chasing more money and killing farms for its own sake and therefore jobs, I don't think is wise. But all these are responsibilities for Parliament. We really need to start, Kenya needs to start to ask ourselves, what's the aim of tax policy? To get sufficient money for government to spend on public services. That does not necessarily mean that we should squeeze all the money that we can from workers on the one side and at the same time from enterprises. And so where the minimum tax fits with the existing tax policy tells us that we are creating distortions. And I think this is something that in all honesty needs to be reconsidered. Thank you.
Okay. The questions are still coming in fast and furious, but we're really tight for time. Mushai, you might want to cross over to the Q&A. Somebody has just asked, so what's the way forward with regards to minimum tax from the KAM's point of view? But I'm seeing Nelson Harvey has joined us. Thank you for making time, even though I only have maybe 5 minutes, which I will dedicate to you. Maybe just your general remarks on the discussion of the day, which is minimum tax that will come into effect by January 2021.
Good afternoon, friends. Thank you so much for giving me an opportunity. 5 minutes is too much. My tax committee chair, Ngumi, has ably represented us. My sincere apologies. I had to attend the admission of advocates, which was supposed to have ended at 10. Unfortunately, it ended at 12. I fully associate myself with the able speakers who have spoken on this issue. Just to add that the tax burden on the Kenyan taxpayer as we speak right now is so enormous that it cannot be borne. It is therefore incumbent upon all of us to enlighten the public and to make a clarion call to all stakeholders, and in particular the government, to see towards abolishing the minimum tax in order that we may ameliorate the plight of Kenyans in the interim as we combat COVID, and in the long term as we seek to recover. Thank you so much.
Thank you, Harvey, for making time and just sparing that minute or two to talk to us. It's been a really engaging, impactful, and insightful session, this one. And the Q&A is still going on. So some of our panelists will be taking those questions and answering them directly at the chat box. However, right now, I want to invite Wambui Mbarire to make her closing remarks and just a reaction to the conversation that we've been having today. And also, as the moderator of the day, I'll be passing over the baton to Sally Kahiu from the Kenya Association of Manufacturers to help me wrap up this conversation. My name is Ndiro Ganga. It's been an absolute pleasure. Wambui, take it away.
Thank you very much, Ndiro. I think the things that have come out across very clearly is the fact that we need a predictable tax regime and definitely a simplified one that will enable people to pay tax comfortably and not feel the pressure that comes with a complex tax regime. The other thing that is quite clear is that a large percentage of the Kenyan businesses, the Kenyan corporates and enterprises are high volumes, low margins, and those margins cannot sustain another tax over and above what we are already paying across the board. A few key elements that we've captured and come out of the speakers today, and this will go towards the impact of having the minimum tax implemented as intended. There will be increased tax revenues at the expense of Kenya's long-term economic gain. And as I think everyone has said, the timing is just absolutely not right. they would not have picked a worse problem. And even if it was based on the fact that they thought, they being KRA and government, they thought that perhaps COVID would last 1 quarter and go on, it is quite clear we are still there. And that should be something that should alert them to not implement this come 1st of January 2021. And I think if we just look at the taxes that people have been paying, we have pay, as mentioned, import duties, we have value added, we have railway development levy that people pay, we have catering levy, we have service charge. If I just take retail and the hotel industry, we pay a minimum of 25 licenses, and that is before you even consider what we pay as we move out into the counties. This will definitely deter startup businesses. And as mentioned by Rose and I think Edna at the same time, we do not have tax holidays for startups, which means a startup will start with the disadvantage of already having to pay that minimum tax even before they have gained ground on the business they're starting. Yet another good reason to ensure that we do not look to implement this. Again, it has been captured by practically all the speakers. Tax is usually passed on to the consumers. And this is a consumer who's coming out of COVID. And COVID meant job losses, pay cuts, reduced margins, reduced low gains at the end of the day. That cost will end up with that consumer who is already under pressure because of reduced income. How do we ensure that we protect that? Is government looking to protect its citizenry by really implementing this tax at this particular time? We will face closure of businesses. We've seen that already. And I know for anyone who listened into the economic report yesterday with World Bank, there are significant amount of businesses that have already closed. There's no business. So if you're telling me come January, it will only get worse, I will make that decision that I think Mushai mentioned, to go back and do farming, look for something that will keep me below the 50 million aspect so that I don't have to deal with this minimum. Are we looking to grow the bracket, or are we looking to shrink it further? As we increase it, we are definitely looking to push people out, because complexity, lack of incomes will mean that I would rather do something that doesn't put me in the radar of the government. It will be interfering with cash flows again, going back to creating greater levels of unemployment as we suffer currently. And the minimum tax, again, is a final tax, meaning you have no recourse to it. So at the end of the year, if you do make losses, money once paid is not coming back and will not cover you for anything that you're now due to pay. So we are looking to, in conclusion, I'll say the things that have been captured, while we are not fighting taxation, we are fighting to get reliable tax system. We're fighting to get taxes that promote growth in the business sector. This one definitely does not. So there's need to relook at it, and we need to have a conversation, a proper conversation. I think Rose mentioned that there had all BMOs, practically all BMOs that represent private sector that will be affected by this tax, sent in their recommendation. And I think Bharat has mentioned government is no longer listening. So we must try and pull them to the table, as we're doing currently, to see if we can find a middle way, a middle position that will have positive impact on both sides. That conversation must be had. I think I would want to end it there, but as I end, I want to recognize and appreciate the BMOs that are working on ensuring that this goes to work for the entire country, not just the government alone. The Law Society of Kenya, represented by President Nelson Havi, the Association of Kenya Insurers, Association of Kenya Suppliers, represented here by Ishmael, the Kenya Association of Manufacturers, Mushai and the team, and a special thanks to Kenya Association of Manufacturers for putting us together to have this discussion, Association of Air Operators, the Institute of Certified Public Accountants, Kenya Tourism Federation, and of course, my own BMO, the Retail Trade Association of Kenya, these are BMOs that have formed part of the technical committee that is driving these conversations. And I would also want to say a big thank you to the Institute of Economic Affairs, Kwame, for always being a very useful partner, very supportive partner, and a credible voice in this discussion. I appreciate the moderator, Ondiro. Thank you very much. And I'll end by saying, government must also focus on public expenditure. I think if I read a lot of the charts, everyone is saying, even as you look to raise money, look to see how you're spending it. Look to see where you can reduce your, the word escapes me, your extravagances, so that we're looking to actually spend money on public services, not spend money on recurring consumption from the government that is really not benefiting people. How do we look to go beyond the 4 million paying taxes now and look to reach the larger population that falls below the radar? I remember sitting in a conversation with KRA, and Juakali sector was there. They were saying, you've complicated this for us. We're willing to come to the table. Why don't we, and I saw somebody say this on the chat, either have an advance tax so that every time any informal person is renewing their licenses gets to pay that then, or have a system that says I will pay. In fact, the gentleman speaking in that forum said, 16 million of us at 50 shillings a day, do the math and see what it would do for the government and for KRA in terms of tax collection. To KRA, I think you have flogged this horse or this cow or milked this cow long enough. The milk is done. We're now bleeding blood. Let's look to be more innovative instead of flogging the same horse. There are very many other people out there. As long as you're innovative, you will find new taxes to raise. Thank you very much, and I'll hand it over to Sally. Thank you.
Thank you. Thank you very much, Wambui. I hope you can hear me. Can you hear me, Wambui?
Yes, I can.
Okay, thank you. Thank you to all of you, and thank you to the participants and the panelists that have made time to be here today. Thank you for all your comments and your suggestions and all your queries, and they've all been taken in by our technical teams that were rapporteuring, and we'll try as much as possible to address all of these things and to continue to raise the tenor of discourse on this particular issue, because it's a really urgent issue. So I will just request that the panelists please remain in the meeting for 2 minutes to have a conversation with our chairman. But the rest of the attendees, we thank you for your attendance, and you are now free to leave the meeting. Thank you so much. I wanted to just display 2 contacts that you can reach out to. If you allow me to just share my screen for a minute. These are the contacts that you can reach out to with more questions or issues that you would like clarified on the conversation that we had today. So we look forward to more engagement, and we look forward to trying to see what we can do in terms of achieving our objective, which is to get some sense around these conversations on tax. So thank you very much. Panelists, please give us 2 minutes as we conclude. The rest of you, thank you so much, and you're free to leave.